Hello there. Welcome back to Zimsec O-level accounts. Today we want to look at a question on accountant accounts. And this question is on the preparation of statement of changes in equity. And we are also going to prepare an extract of a statement of financial position that is at the balance sheet. So this is question that we have. So let's subscribe to our channel, Accounting Space. Let's subscribe and share. And let's share the link to our colleagues who are doing Zimsec O-level accounts. Let's turn the notification button on so that we get notified of new videos that are going to be uploaded as we prepare for a final upcoming final exam. Wish you the best in the exam. So as for this video, let's just start by going through the question and then we answer what is required. Then our question is here numbered question 5. So we are going to go through this question. The question reads a lay under distributors limited and the following balances after the preparation of the income statement on 31 December 2020. So you see that we are given issued share capital. So we have got elements of issued share capital there where we've got 100,000 owner shares of $1 each, and then we've got 200,000 10% preference shares of $2 each. Then obviously we have other information that is inside our information that we are given as a list of balances there. Then beneath that or below that we are given the following information is also available, whereby we are now given authorized share capital, and then we also have further information given on 31 December 2020. The directors, first part is saying pay the remainder of preference shares dividend for the year. Second one, pay the dividend of 10 cents per share on ordinary shares. And last part is transfer $2,500 to the general reserve. Then we go to the question part. We are going to look at question A, which is saying prepare a statement of changes in equity for the year ended 31 December 2020. And then part B, prepare the statement of financial position extract at 31 December, showing the capital structure. So these are the two questions that we are going to look at within the context of this video. So we're going to look at A and B. So we can go now to our answer section and see the first part of the preparation of statement of changes in equity, whereby we have the layout that we have here that we're going to follow according to this video. So this is what we have, which is the statement of changes in equity for the year. Let's just try to see for the year ended 31 December 2020. So we've got a column called the share capital, preference share capital, general reserve, retained earnings, and obviously the last column becomes the total. So obviously here we are going to start with our opening balances, and we'll try to see what opening balances are we given in the question. So we are going to see that this is the description that we have for opening balance. So we're going to put our opening balances here, and then obviously in the same row we get the total here. So I will go to the question and try to see what opening balances are we given in the question. So if you come here, you would see that as for order shares, we are given 100,000 order shares of $1 each, of course, with the balance of $100,000 there. So it means $100,000 is going to be our opening balances for opening balance for the shares. So we can go and put our 100,000. And then for preference shares, we are given it there as 200,000 10% preference shares of $2 each, which gives us a value of 400,000. So basically, this is what we remember to get our 400,000 here. We are saying 200,000 times 2. Because each share is $2, and then we multiply by 2, then 400,000. So we're going to put our in the column for ordinary shares, this is opening balance 100,000. Then for previous shares, we've got 400,000. So we are going there, and as such, we come here. We are saying for ordinary share capital, the opening balance, remember that we note there is 100,000. Then we go to preference shares. Remember the balance that we got there is 400,000. Then we check in terms of general reserves and also if retained earnings there. If you come here, we'll see that on the last part, we are given general reserves 31 December 2019. So this is the opening balance that we are going to have 30,000. And then on to check for retained earnings. So retained earnings, we check for, we have got two here. The first one is saying profit for the year ended 31 December 2020. So this isn't getting the profit for the year. So it's not the opening balance, but if you look at the second one, which is a profit and loss account now, 31 December 2019, where the previous year ended, so it came in the current year as the opening. So we've got 85,000 representing the opening balance for retained earnings. So we go there. We are seeing for general reserves, we have got 30,000. Then for retained earnings, we are going to have our 85,000. And then on the total column, we are going to say we add all what we have in the row of opening balance, where we are saying 100,000 plus 400,000 plus 30,000 plus 85,000. And obviously, the total that we are supposed to get there becomes 615,000. So here we have put 615,000. So having done that, now we are supposed to add our profit for the year. So we have got profit for the year. So we go to the question and try to find out about that profit for the year. Remember, we've got a figure that we are given there as our profit for the year, which is here. It is profit for the year ended 31 December 2020, we are given 70,000. So we can go back and put our profit for the year. So the column that we're going to put our profit for the year is going to increase the figure that we have for retained earnings. So we're coming here and putting our 70,000. And obviously on the total part, we're also having our 70,000. Because we don't have anything there in other columns, so we are just putting the same figure. Then after that, we are also trying to understand about if you have got any transfer to the general reserve. But if you come here, you'll see that we have got a transfer in the additional information that we're given. Go to item 2 on the last part, transfer $2,500 to the general reserve. So remember, whenever a transfer is taking place, we are taking this transfer from the retained earnings, and then we put it in the transfer to the general reserve. So in other words, it's increasing at the general reserve balance, but it's decreasing the retained earnings. So we can just go and demonstrate there in terms of what is required. So what we are saying is we are now on transfer. Transfer to general reserve. Then on our transfer to general reserve, we are saying we are having $2,500. So we are saying we are taking this figure from the retained earnings column. So we are saying 2,500, and it becomes a negative. And if we show a negative, we can put a bracket, and then we transfer it to the retained earnings now. So we are adding it to retained earnings. So this is the adjustment that we have. And then obviously we are going to the section of our dividends. Then I will try to check in terms of dividends, but as much as I on dividends is that pay the remainder of preference share dividends for the year. So it means all the preference share dividends were paid, because this remainder was then paid on 31 December 2020. So we go to the list of balances to see the calculation of dividends or preference dividends. So we are given that is 10%. So obviously it's going to be 10% of the figure that we have of 400,000. So basically we are saying for preference, we are going to say 10%, which is 10 over 100, and then we multiply by 100,000. And obviously, we are going to be left with $40,000 as our preference dividend. So this becomes our preference dividend. So we can try to find our ordinary share dividends. So obviously, on our share dividends, we go again to our additional information. We've got an instruction in terms of how to calculate it. So if you come here, we are given that pay the dividends of 10 cents per share on order shares. So basically, we are saying 10 cents times the number of shares that were issued, and then we get the order dividends. So if you come here, you see that number of shares issued, we've got 100,000, and it's saying 10 cents. So we are saying here 10 cents times 100,000 shares that are there, that are issued. Remember, we are concerned about those that are issued when you calculate dividend. So here, if you calculate, you see that the answer that you're going to get becomes 10,000. So these are the figures that we are just going to So this is the ordinary dividend. So these are the figures that we are going to include in there, whereby we're having our preference here. Our preference dividend is 40,000, and then our ordinary dividend is 10,000 according to our calculation. So we can go there and just adjust as such. So let's try to remove this. So I will go there and just indicate it as such to say. We are on the section of dividends, so we are saying less preference dividends paid. So we can just say less preference dividends paid. And then the amount that we are having, remember the column that we are supposed to put is the column for retained earnings. So we come here, remember the figure that we got is 40,000, so retained earnings is here. So we are saying 40,000. And remember, we show it as a negative. And also beneath that now, we now have our ordinary dividends. So I will also say less ordinary dividends paid. And the amount that we have there, remember we calculated it and we got at 10,000. So it's what we're saying is we've got 10,000. So likewise, we are also subtracting. So when we subtract from our retained earnings on the total part also, we are going to show it as a negative again, 40,000 for our preference. Then 10,000 for our ordinary. So this is the last part of our table of changes in equity. Then we can as well try to calculate in terms of the totals. So let's just try to see. Right. So we can now try to find out about the total and put the totals in the column. So this becomes our closing balances. So we can put a description here of saying closing balances. So we are saying these are now our closing balances. Let's just try to see. So this becomes our closing balances. So we start with the first column that we have there and try to see what we have. We have 100,000 and no adjustments along the column. So we can just put our 100,000. Then our next column, we are having our preference share capital, whereby we're having 400,000. So we can as well try to put our 400 there since we have no adjustment. Then we go to the next one, which is now our general reserve. And of course, we're saying 30,000 plus 2,500, and we are getting 32,500. Then the same applies to our retained earnings, whereby we're saying 85,000 plus 70,000 minus 2,500 minus 40,000. And then it also means minus 10,000. And then the net figure that we're going to get there becomes 102,500. So the same applies on the last part, which is the total. We are saying 615,000 plus 70,000 minus 40,000 minus 10,000. So we get the final figure is 545,000. So remember here on adjustment of transfer to general reserve is 2,500 and 2,500. So obviously this one will be 0. So we can just put a dash there. So this is what we have, but we see that these are the closing balance that we're having. But we have the second part of the question, which is saying prepare the statement of changes in equity. Prepare the statement of changes in equity for the year ended 31 December 2020. That is the first part. And then the second part is saying prepare the statement of financial position extract as of 31 December, showing the capital structure. So capital structure, we are just going to show the equity part of our statement of financial position or balances, whereby we're going to start with our authorized share capital. Then we just list our authorized share capital as a procedure of disclosure. And then we go to the issued share capital now. So we go to the answer section. You see that this answer section, we are going to have our statement of financial position as of 31 December 2020. So what we are saying is we're going to start with equity. Whereby we are going to list our authorized share capital here. And we are saying our authorized share capital will just show it, but it doesn't affect the calculations in the statement of financial position. So it's a disclosure procedure for authorized share capital. So for authorized share capital, we check in the question what are the elements of that authorized share capital. Obviously, we are given that in the additional information. Authorized share capital, we have it here. It's saying 150,000 ordinary shares of $1 each worth 150,000. So we start with that one. So we are seeing 150. We are saying 150,000 ordinary shares of $1 each. Then we can put them in this column where we're saying it's 150,000. And we check in terms of preference. For preference is 200,000, 10% preference shares of $2 each worth 400,000. So we can now check our preference, whereby we are given also information of preference in the additional information. So let's just try to see. Here we are given preference. We say 200,000, 10% preference shares of $2 each worth 400,000. So we can just go there and adjust the size will come here. So on preference, we are saying we have 200,000, 10%. Preference shares of $2 each worth 400,000. So we add the two, and then we close. So this double line indicating that we are closing because these figures are not going to affect any calculations that are going to follow. So we just close them. We get, so as I was saying, it's just a disclosure procedure. We say now 150,000 plus 400,000, and we are going to get 550,000. So this is the total authorized share capital that we have. So we go down now. We go to the issued share capital. But issued now shows it's going to affect our calculation that I'm going to follow. So we've got issued share capital. So we can just go there and try to see in terms of issued. So issued is given in the list of balances whereby we say 100,000 order shares of $1 each, and it went up 100,000, and then we've got 200,000 10% shares of $2 each with 400,000. So this is what we have. So we just go and list those as our issued. So we are saying for the first one, which is ordinary shares, is saying 100,000 ordinary share capital. The shares of $1 each, which are worth 100,000 again. So we put in the last column now. And we also have our preference, which is 200,000. 200,000, 10%. Preference shares of $2 each. And we are saying they are worth 400,000. So they are with 400,000. So let's just try to see. So this is what we have. Then we can just cross check in terms of our figures that we have there. So this is what we have. So we can now go to the reserves. So we can just maybe put a heading there of saying reserves. And we're going to list our reserves here. Remember, our reserves, we're going to have our change in earnings and our general reserve. But obviously, we have them. So we can start with our general reserve. So the general reserve, we take the figure that we got in the statement of changes in equity to represent our reserves. So we come here, you'll see that our general reserve figure that we got, it's here. We are having the column for general reserve here. And then we got 32,500. So this is the figure that we are taking. And also we can just check again in terms of retained earnings. The figure that we got is 102,500. So those are the two figures that are going to go under our reserves. So we come here. Remember, we're saying general reserves, and then the figure that we got is 32,500, which is going to come here. And also we have our retained earnings. Whereby we are saying the figure that we got there is 102,500. 102,500. And then obviously we can now try to add to get the total for our equity. So this is what we have. So obviously we will now try to add there so that we get the total for our equity. So basically what we are saying is we are adding everything that we're having in this last column, where we're saying 100,000 plus 400,000 plus 32,500 plus 102,500. So let's just try to do those calculations and see what we get there. So if you say 100,000 plus 400,000, you're going to get your 500,000, and then you add your 32,500. And then also you add your 102,500. And then the total figure that you are supposed to get there. Let's just try to add there. You are going to get your 600, your 635,000. So this is the total that we are getting here. So it means our total for equity is 635,000. So this is what we have, guys, according to this video. Let's subscribe and share. Let's turn the notification button on so that when I upload new videos, you get notified as we prepare for final Zimsec exams. Let's share the link to our colleagues who are doing O-level Zimsec accounts. As for this video, I'm signing out, and we'll meet again in the next video.